Greetings everybody, Sive here with ForexPeaceArmy.com. Let's take a look at the gold market. Situation here is becoming complex. Yes, gold market trying to hold the levels a bit better than the euro currency. It has a bit stronger resistance to the overall bearish factors for the gold because it has some other sources such as the geopolitics. So you probably heard about the scandal around Ukraine right now, some big investigation on the money laundering involving the daughter of the Calyx. So it's a really big process, and it's a really could change the shape of the politics in Europe. Second is a recent Fed minutes protocol has shown that it's not quite dovish. So actually now the chances for the rate cut stands under question. Some liquidity issues still exist on the market, so that's why all this stuff makes some pressure on the gold, or better to say supportive for the dollar. As a result, what we've got, just yesterday we talked about the grabber that has been formed on futures, but today you can see that we have got the opposite pattern. And I would say that in the current circumstances, this pattern has a priority. It's just because it confirmed by the most recent external fundamental data that we have. Tomorrow we should get the payrolls report, which could also bring some clarity. But with the performance that I see currently on intraday charts, at this point, I wouldn't consider taking new long position by far. So those positions that we have taken, they are okay. So currently they're in either stance in the positive area or just protected with the break-even stops because market stands above our entry points. But at the same time, the price performance is not really good for bullish perspective. So here's what I see. On the 4 time frame chart, I just show you a few different patterns that potentially might be formed. For example, if we get lucky, maybe we will get at least a kind of the guardless triple to sell. So let's suggest that these hand shorts probably will fail based on the grabber that we have. Because if market will not complete the neckline, it already will be the failure of the hand shorts. In this case, we should be prepared for the downside drop. In general, yesterday we already said that this sell-off is not really good sign for the bullish reversal pattern, but it was okay just because market formed bullish reversal swing and a 618 retracement after that. It's absolutely normal, and indeed we've got a few good entry points on this upward action. But now you can see market is returning down. What it will be, whether it will get the first upward reversal here, market will still complete the hand shorts, or it will be collapsed, we will see. But currently at this point, with the grabber that stands in place on the daily chart, which is potentially bearish, and with this performance here, I will show you on hourly chart. It's a bit clearer why I think that this is not quite bullish. Chances on this action are not really very significant. Still, you could keep an eye on the pairing of the grabber, since we are not suggesting taking a new long position, but it might help you to manage existed one. So for instance, if grabber still will be formed, well, that could tell you that probably maybe some upward balance here might happen. As you can see, just it's some additional information to manage your positions. But in the current circumstances, with the factors background, chances on slight deep action seems preferable rather than sharp reversal. Only if something else will happen, another external factor will come that could change the situation. This is possible. On the background that we currently have, chances are not really high. So on hourly chart, let's have a look. As we suggested, we've got this accurate retracement down to the 618 support that we said if you would like to take the position, watch for this pullback, forming right arm. We've got great guardless triple to buy. Market even shown the bounce. So if you have taken position either here that we talked about a couple days ago, or this retracement, you could move stops to the break even now and see what will happen. Why I do not like the overall performance? First of all, it's a bit fast to the downside. Second, take a look that market actually already has completed 4036 area. Its ABCD is done, but instead of the upward action, some sharp reversal, fast action, which is usually should follow by the hand shoulders pattern, we have instead this pressure that's pushing price lower right back down to the support. This is bearish sign, and it actually could lead to the failure of the small pattern first, but later, as a nested doll, collapse of this bigger pattern if downward action will continue. So in this case, I wouldn't be surprised to consider a few targets to the downside. This might be just since this will be the some kind of the ruins of the hand and shoulders pattern, and as a rule, on the ruins of the hand and shoulders, you have the butterfly. So it will be either here 39.60 or even here 39.14. In current circumstance, 39.14 seems even more reasonable with the drop back down, because failure of this big pattern suggests drop below 38.85. So it will be deeper action here, which is actually could give another butterfly and so on. That's what we have on the table, and you can see lots of important events is happening and big pattern stands on the table right now. So as a conclusion, currently you could try to keep existing positions because they are protected with the break-even stops, but do not consider yet any new longs. See what will happen, because our situation could change really in a couple of days. Today, tomorrow, we could get clear bearish context on the gold market, and we'll have to search for actually opposite scenarios for trading. That's all for now. See you tomorrow.